standing by. He's with Blue Line Futures. How are you on a Monday, Oliver?
I'm hanging in there. It's a nice way to start the week. We're seeing some green across the board, not just in the grain sector, but the livestock as well, and it's very encouraging, I think, to set the tone on that solid footing. Looking at some of the technical levels to start the week, specifically for that May corn contract, we're kind of right in a consolidation mode, I guess you could say, after last week's strong rally. 379 to 382, I think, is going to be significant support going forward. This is previous resistance and represents the 200-day moving average. So long as the bulls can maintain price action above this, I think they remain in control. Also on the technical side, it was very interesting. Last week, we saw what we call a golden cross, which is where the 50-day moving averages cross above the 100-day moving average, and is typically very bullish. So good signs here to start the month in the corn market.
All across the corn board right now, all the contract months, except for the nearby March, which is in delivery, they're all just 1/4% higher, so not much movement there at all. I understand the funds are net long now, about 59,000 contracts.
Yeah, they bought back about 36,000 contracts last week, and they're starting to establish a decent size net long. Their net long, as you'd mentioned, 58, 59,000, somewhere in there, and I wouldn't be surprised to see them continue to add to this position over the coming months. It'll be interesting to see once we do get towards some resistance levels in these contracts, whether they kind of sit on their hands, reduce, or just blow through it and keep on adding. For that May corn contract resistance, we're looking 391 3/4 to 392, so that's going to be an area to keep an eye on going forward.
So what's been your experience when you get into the planting season, the growing season part of 2018 here? Do the funds just traditionally take more of a long position then from that point on?
Well, you start to see some weather premium come into the market, and it seems like we're seeing that come in a little bit early thanks to South America. I was joking with some clients last week. If you looked at a soybean chart here recently, you would have thought we were in the middle of July, the way we've been rallying. The funds have obviously flipped from a net short position in soybeans to a relatively large net long position. I think they're long about 140,000 contracts. They bought another 47,000 last week, so it doesn't look like anything's stopping them just yet. Now, if those weather premiums do evaporate from the market, that does leave some exposure to long liquidation, which could always be a risk.